This crucial bond auction, of course, a major test of sentiment on Ireland's debt. So let's just find out what my next guest makes of it all. He is Gary Jenkins, head of credit research for Evolution Securities. Gary, thanks very much for coming in. Let me start by getting your reaction to what we've just heard. You were saying that demand is okay for Irish bonds, nothing special.
Yeah, that's pretty much in line with what we're expecting. It's not dramatic, it's okay. It gets today's problem out of the way, and then we put a diary card in for the next one.
Do you think it'll be enough to convince investors that Ireland won't need a bailout from the EU or the IMF?
Well, they're not going to need anything in the near term. They're pretty funded for a while, so they're going to be okay. And the key question is going to be what happens to their bond yields in the interim period. Clearly, we've got the stabilisation fund in place now. The safety net's there if required, so it's not a question of going bust. It's just a question of whether they need outside assistance. At the moment, they're going to be okay for at least 6 months, 12 months.
And how do you explain what we've been seeing with regards to the yield on the bonds? They've been, of course, widening in relation to German bunds, but we seem to be seeing them narrowing right now, some stabilisation there?
Just a little bit of stabilisation today after a very, very bad couple of weeks. S&P downgraded them. Then they came out and said they weren't too sure what the total cost of the bank bailout was going to be, which really spooked the market, because if you can't put a figure on it, then people just take the worst-case scenario. So we've seen the trend being very, very poor indeed. A little bit of stabilisation at very high levels is good, but it's not dramatically positive.
How do you explain, Gary, that the widening yields that we've seen of all of Europe's most indebted nations, really, the investor concerns that have been there all along, they never went away?
No, we keep going around different ones. If you think back 2 or 3 weeks ago, Ireland wasn't the concern. The concern was Greece, the concern was Portugal. Now we're back on Ireland. Spain's gone away. No one's worried about that. But maybe in a month's time we'd be worried about Spain again. So it's like a merry-go-round, and it just depends which day, which one flips up for us to all be concerned about. But with the amount of debt that's outstanding, this is going to be a situation we're going to face for the next few years. You just can't magic it all away.
So in other words, very little can be done to restore confidence once and for all in the markets?
I don't see much in the way of economic growth coming through. I think the cuts are going to be difficult to implement across Europe, and therefore I think we're going to be in a situation where it's going to be fragile for years, and we're just going to have to get used to this.
So what you're saying is that Euro-region governments won't be able to count on faster global growth to help push down budget deficits?
I just don't think we're going to see the kind of growth that they need to get budget deficits down significantly in the near term.
Okay, well, thank you very much for coming to speak to us. Gary Jenkins, head of credit research, Evolution Securities.